So if you were all here yesterday, you heard Renato in the morning talk about how open finance and open insurance have been growing in Brazil, the impact that open finance has had, the large adoption. And if you come here often, you've probably heard me many times talk about open finance. But today, following what Sophie was saying earlier, we're going to talk about the transition from open finance to open data. Many countries are still working through the implementation of open finance, but at the same time, they are already thinking about that next step and how to bring in non-financial data into the ecosystems. And we at CGAP are very interested in that because that is particularly important for the people that don't have a strong financial footprint. Open finance can solve for people without a credit history that have a transactional history, but it has a smaller impact on those that don't have at least a digital financial footprint. So open data offers the opportunity to open up that impact to a broader set of people, as well as having more robust data for those that are already there. Like Sophie said before, Korea and Australia are two of the pioneers of open data because their frameworks were very much from the beginning thought about as a data initiative, not exclusive to the financial sector. But I'll stop there and then I'll let the experts tell you more about that. So I'll start with Ian, who's on our screen. He's the commissioner at the Australian Competition and Consumer Commission. And I just want to ask you, Ian, if you could just tell us a little bit about the context that led Australia to choose your approach to open finance and open data, and where you are today in that journey of expanding the scope.
Thank you very much for the question, and it's really great to be here. Sorry I cannot be there in person, but the next best thing is to beam in from the other side of the planet. So Australia was really struggling with productivity, and we had some real challenges with all factors of productivity, including multi-factor productivity. There were reviews done in economic and productivity reviews done in 2014 and 2015. In fact, it was called the Murray Financial System Inquiry and the 2015 Harper Review. And all of these pointed to some pretty big and obvious challenges, and that had a lot to do with data sharing and use. Then we have a productivity commission in Australia who have been looking at elements of productivity for decades, and they produced a landmark report in 2017 called Data Availability and Use. And that really said that it's time to unlock the data which is in different silos in government and in industry and in various different areas, and also digitize a whole lot of the work that we had been doing. So it was really fundamental. So what was decided? That there would be an economy-wide, government-led approach to open banking, built entirely around the legal foundation of something called the consumer data right, which contrasts with voluntary bank-led models in areas like the EU or the UK. But that it wouldn't stay just with banking, it would really be economy-wide. So the right to use and share data, if it only applied to banks, would provide limitations. So the design for what's called the consumer data right, the CDR, from the very beginning was intended to be multi-industry and cover all sectors. And of course, the elements that were really important were to shift power directly to the consumer, mandating that bank-grade privacy safeguards and strict consent models and secure API-driven data transfers would be used instead of things like screen scraping. And there would be a phased rollout. It started with banks, and that has been a really interesting experiment working with banks. It's probably the most important part of the sector to get data to move around and look at how we can improve productivity and protect privacy at the same time by moving to this consumer data right. It's moved to the energy sector, and We have 4 major banks in Australia and a whole lot of other banks, smaller tier 2, tier 3 banks, but we also have a lot of non-bank lenders. So we really focused hard on the banking sector to learn what we could. We built a lot of infrastructure, we put in place a lot of rules, and the banks with varying levels of enthusiasm responded to those rules and requirements. And now we're testing in the energy sector, trying to take what we learnt from the banking sector, move to energy, see what we can really unlock in that space, and then increasingly allow non-bank lenders to come into the space. And that's where we are at the moment. So the aspiration was really entire sector productivity unlock, and do so in a way which is safe, secure, removes friction from data sharing and use. And banking has been a really interesting first few years, almost 5 years now. Energy is relatively new, about 1 year into the energy journey, and we're just now beginning to accredit non-bank lenders to come into the space. So it's been a really fascinating journey. Hopefully, we will go back to that bigger vision of whole of economy, but we're certainly learning by doing at the moment.
Thank you so much. And I think let's hear a little bit about the Korea experience. If we can switch the tech. We have Chung-hee Song, who's the chairperson of Korea's Personal Information Protection Commission. And I just want to ask you, in Korea, the Information Protection Act applies across sector. So in your view, what makes My Data, which is how Korea has branded their framework, work in practice, and what are the conditions that are enabling to people to manage data across different sectors with consumer protection in mind?
Yeah. First, I'm so happy to have an opportunity to share our experience and knowledge about data sharing and the protection of privacy together. The idea behind Korea's My Data initiative is actually quite simple. Personal data may be held by many companies and public institutions, but it is still data about the individual. So people should have the right to manage and control it themselves. In practice, My Data allows individuals to download their own data directly or request that it be transferred to other service providers of their choice. A major milestone was the 2023 amendment to Korea's Personal Information Protection Act, which introduced the individual's legal right to data portability in the name of My Data. From the perspective of business, the data they hold may be viewed as their business asset or proprietary business information. So the introduction of right to data portability created an important foundation for encouraging companies to share their data with individuals or third parties designated by the individuals. At the same time, for the My Data ecosystem to work in practice, the third-party business providers should be able to develop useful new services using transferred data. Mm-hmm. For this reason, Korea has taken a gradual approach. We started with the healthcare and telecommunication sectors, considering both public demand and infrastructure readiness. And we plan to expand step by step into other sectors such as education, energy, and retail. The government has also carried out projects to help the third-party business market entry in the early stages by supporting the development and piloting of services that people can benefit from in daily life. So far, Korea has identified the 9 practical projects, including chronic disease management, personalized telecommunications plan recommendations, and customized travel planning and budgeting services. Another important factor is user accessibility. We have focused on making the system easy to understand and use. For example, Korea operates the On My Data platform where individuals can check their transfer history and withdraw transfer requests if needed. Finally, secure and standardized infrastructure and trustworthy governance are essential. Korea uses standardized APIs and designated intermediary organizations to support safe and reliable data transfers while reducing the burden on data providers. So to summarize, the key conditions are as follows. First, establishing an institutional foundation for data sharing by legally guaranteeing individuals' right to data portability. Second, enabling business to explore opportunities to create new services through data sharing. And third, encouraging active participation by business through support programs. Yeah, thank you.
Thank you. Let me move now to the room. I have Ariadne Plaitakis here. She's the Deputy Director for Regulation Policy and Research at the Gates Foundation. And we've talked about, I know that the foundation, you've done some work trying to bring together the data protection authorities and the financial sector authorities, thinking about better coordination around open finance and other aspects of the financial sector. So can you tell us a little bit about what you learned through that work and what can we learn from that coordination to the broader coordination you're going to need as you move into more sectors?
Absolutely. Thank you very much for inviting me. So what we did is about a year ago, we realized that data was really important to the Gates Foundation strategy, especially around regulation, and that we saw that there was these bottlenecks, or at least these like misunderstandings or lack of understanding between financial sector authorities and data protection authorities around topics like AML-CFT. I don't know if you've been following, but Recommendation 16 is about basically sending data with cross-border payments, and it ends up being including sensitive data. And a lot of that was implemented without thinking about any of the data protection considerations. So we saw that there was clearly some issues, and we've been working in open finance, which is a really important area where there's a lot of data, right? So we decided to put together, have Cambridge Center for Alternative Finance is working on a landscaping study about, first of all, understanding sort of how currently data protection authorities and financial sector authorities work together, like what forums of collaboration exist, but also understanding, how, looking at specific use cases, trying to understand like what are the issues and what should they be doing, not just how they're doing, but should be doing. The idea is that they're going to come back. We're going to be thinking about how we're going to stage our strategy around this, but we have some preliminary information or sort of recommendation that came out of it that I'd love to share with you from the study. The first thing that we've learned is that the coordination challenge is not a legal mandate problem. It is really about an absence of a regular dialogue between these authorities, about a shared interpretation of what actually they're regulating and working on, and also a lack of operational coordination. So let me go a little bit more in depth about that, is that we found that there's a lot of practical challenges that arise because both the data authorities and the financial sector authorities interpret their legal obligations in regard to a specific use case differently and separately, right? And so it's not that they lack authority, to be working in this area, even though they should be, but they're just not structured, and they're not structured opportunities for them to align on how these mandates apply to the same exact type of data sharing system. And so if we look at open finance, what does this mean? There's technical interoperability, and then there's regulatory coordination that have to go hand in hand. So open finance itself focuses on things like APIs, security standards, consent mechanisms, and data sharing rails. The data protection elements, however, are different. They are really around the lawful basis of sharing the data, how the consent in the data protection sense, access, safeguards for that data sharing, accountability, and redress. And so the system needs both interoperable technology and interoperable regulatory expectations for it to work. And so as we expand to open data, the governance model needs a formal channel to coordinate between the data protection authorities, the financial authorities, but I would actually believe also other authorities, because you're going to be adding more data from the economy, whether it's the Ministry of Telecom, whether it's a competition authority, whether it's the utility regulators, of energy, as was stated in Australia. And so I think open data actually creates an even broader coordination challenge. Because in open data, as I said, the number of actors are much greater than just data protection and financial sector, right? And you might even get ministries involved, so not just regulatory bodies. And so this means you really need formal coordination. It can't be ad hoc consultation. And this coordination has to go across the full policy cycle. So what I mean is that authorities should coordinate at the design stage when they're making their different frameworks, but also they have to coordinate during supervision so that the providers have consistent guidance, because they may be being supervised by several authorities. And there should also be referral and escalation channels when harms or regulatory conflicts arise, And I think the ultimate goal actually here is to create, to give providers and consumers confidence. And so without this coordination, firms are going to have unclear or conflicting expectations among the different regulatory frameworks, and consumers may not know who is accountable if there's some sort of breach around data, but it may be related to a financial service or a utility issue, and they may not know where to reach out to. And I think with coordination, both open finance and open data have to have clearer frameworks. They'll be then more trusted, and I think we'll be able to implement them more responsibility. Thank you.
Thank you. And you mentioned the trust of customers and providers, so I think that's a good segue to our other two panelists that are here representing more the financial sector. So let's start with Paula, who's the COO of Mercado Pago. Some of you heard from her yesterday talk a little bit about what Mercado Pago does and Mercado Libre, but not everyone was there, so you can give some context into that. But the question is, you have access to additional data because of the Mercado Libre side of your business, so and other partnerships. So how does that enhance the products you're able to offer your customers?
Thank you, Maria, for the invitation. Glad to be here sharing this with all of you. And yes, our journey started even before Open Finance in Latin America. As you said before, our models that today are looking to serve unserved people or financial underserved people in Latin America started trying to gain as much as information as possible as we were able to collect from our ecosystem, mainly the marketplace, but then expanding that to all the transactions and the path that our clients were leaving every time they used any of our products. So we were able to collect thousands of variables that come from the type of products that they search for, the type of navigation that they do, if they ask questions, the type of device they are navigating from. So everything they do leaves a pattern that helps us moderate and model the score, the non-traditional score that we can collect and we can form from our users. That today is allowing us to serve with credits to 70% of our clients that do not have access to traditional credit lines in traditional institutions. I think we were pioneer because taking from Open Finance, one of the most important elements that is users' consents, we were able to open our APIs even before Open Finance raised in Latin America, for those clients to offer their own information to other entities, not just our ecosystem, to use that information in order to receive credit lines. So many startups in Latin America were born by accessing Mercado Libre's data with the client's consent to offer alternative credit lines to those customers. Of course, then open finance arose. I think Renato told us yesterday about many of the great things that Brazil today is showing that can offer us, and I think it's the way in which we should be evolving in the rest of the countries, where, of course, a lot of new information appeared. Now we are able to complement the information that we have with enriched information coming from the financial system. And I would say we saw not only excellent results regarding the credit models, that is one of the obvious things where you can use this type of information. I say that one of our main KPIs was that now we are able to serve 30% of extra SMEs that starts operating with us without asking them to have like 3 months of history and being able to lend them money even on day one. So that was thanks to the open finance information that we can collect. But on the other side, we also say that it is very, very important to enhance education, to enhance recommendations, everything, and linking also today with what we talked yesterday about AI. Many of this education would be stronger with the more data that we can have from that client. So today, our personal banker started recommending things, comparing expenses from 1 month to the other, what they can do to save better. If they have money in account A and they are in red in account B, the suggestion of moving money for the client not to have to pay interest with no need. So all this stuff and the way in which users are going to start interacting with this personal assistant that will recommend them, that will educate them in all on their financial needs and not just credits, is thanks to open finance, and of course it can be enriched with open data. Last but not least, I think that we are now all talking about these benefits, but once the client has its account functioning, but do not forget that the main issue specifically for SMEs, where regulation and KYC regulation is even more complicated, starts in the onboarding and in the account creation. And we have not seen yet any track of open data functioning as well as to allow these small merchants that many times they have to upload information and documents regarding the creation of the company, the composition of the authorities, the person with the authorization to operate the account, etc., 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 etc. But there are a lot of steps and a lot of friction in doing that. How can all those things could be really, really, really much more easier from the beginning and since the account starts to operate and wants to be created. So a lot to do, and I hope this all new trend and expansive trend of open data can bring no more than better outcomes for the whole digital ecosystem.
A better customer experience.
Exactly.
I think what's also interesting from the data you have from the platform is not just that you can use it, but you can also see how the open finance loans impact your sellers' activity, right?
Exactly. It's amazing because when you see, once again, the underserved user taking the credit, you can see that the sales can multiply by 5x in time. They can hire more people. They can expand their businesses. They can constitute the growth they were seeking for. So we are able to follow up, not just the beginning, but as you say, the results that these credit lines have in their businesses and in their lives.
Thank you. So let's move now to our last panelist. Solem Boutois is the head of data operations and AI at AXA Essential. And insurance there's different types of insurance, right? So it sits at the crossroads of a lot of different data sets, finance, health, transportation. So can you tell us a little bit about what data sources or what types of data you're currently using, and what challenges do you have to access more data that could potentially be helpful?
Okay. On insurance, it's true that we are very much looking at what is happening currently on open finance and on the banking sector. You will have a lot, as you said, a variety of data in insurance, behavioral, biometric. You will have the financial data, transportation, all the climatic one, etc., etc. We manage a lot of variety in order to structure our product around. And you will find them during the entire chain of value. So it's true that today when we talk about open finance and and its translation to open insurance, notably regarding traditional insurance, and by traditional I mean as opposed to inclusive insurance, you have a lot of challenge regarding the underwriting, where we could have sometimes extensive questionnaire to get the data in order to properly assess the risk and get the right pricing and the right policy to the client. If you think that we can get in a world where every single individual can have a synthetic profile of their own data that can be inter-exchanged between players, this would simplify extensively the different processes. Claims, the quantity of data sometimes we end collecting, relying on the client, and sometimes the client that don't know how to find them, take time to find them, get frustrated because then doesn't understand why the claims don't get closed. All those things can be simplified by open data. The fraud at the end, we forget it, but it's a cost to the customer, because fraudulent claims that you don't flag will increase the claims amount of your portfolio and will translate in increase of price as well. So better fraud control, health, a better control of the provider. If you're not familiar, in health, we're extremely conscious about what is called fraud, waste, and abuse. So fraud is clear, but waste and abuse is more overbilling of health treatments, either conscious or unconscious. Some doctors will prescribe you analysis you don't need, unknowingly or unknowingly. This costs hundreds and billions of US dollars every year to the industry. But when it comes to the inclusive insurance, I would say the picture is a bit different. In inclusive insurance, the approach that we've taken and that is working was to remove already as much as possible the data collection. So all our products in inclusive insurance are pre-underwritten. So you take the product. In a lot of cases, they are also embedded, so they are attached to a credit or to a saving account or some e-wallet, etc., etc. So you don't have this lengthy underwriting process and data collection process from the beginning in the inclusive insurance, because it was too much of a friction for our customer to implement this kind of thing. You will see the same in the claim side. Having said that, one of the things where open finance and insurance could be extremely interesting for our segment is related to access and product structuring. Regarding access, almost all of our products are being distributed through partner, being financial partner, bank, fintech, finance institution. And so the idea of having those API that are standardized across the industry would simplify a lot the development of the embedding or the partnership with those different actors. The second thing is regarding the product structuring. One of the biggest difficulty in our industry, in the inclusive insurance industry, is to really understand the need of your customer. They have very different behavior than what is called the traditional insurance. And so for us, it takes a lot of customer insight survey, so questionnaire. We will question a lot of people, thousands of people, in order to precisely understand. But what you will realize is that even if you go to them and speak to them, you can have some bias in their answer. And an analysis that we've run recently, which I think is extremely interesting, and that was inspired from the work of Jonathan Murdoch. If you've ever heard of him, it's fascinating. Were the financial diaries. So you take a few family and you ask them to precisely write down every single day all the money they receive, all the money they spend, and the savings they could make. And they make this follow-up over several months, and at the end of the several months, so first, I guess you will not be surprised, but a lot of them would share with us, I will continue it because I feel I'm getting better understanding of my spending and my budget and get a better control over my budget. So it's great that they see an added value to that. But on our side also, and on their side, sometimes they are very surprised by the outcome. We ran one in Senegal recently, and some family would say, I realized that I'm spending 30 to 40% of what I'm getting on my health, and I was not aware. And some months it will be and they were not aware because some months it will be minimum, and 1 month they will suddenly spend 150, 200, 300% of their entire monthly revenue on a health bill. And this for us is extremely important to understand because it helps us understand what is the limit they need, how much do they need in terms of reimbursement, because we understand how much is spent. And then more than that, where is it spent? When you think about traditional health insurance, you will think a lot about the hospital bill, securing you cover the surgery, etc., etc. In our segment, and especially in emerging markets, not all, but most of the country, people will have and will rely for hospitalization on the public system that is mostly free. But then you will have a lot of difference depending on country, where you will realize that when it comes to health, people will spend in some country a lot on medicine because all the medicine is imported and are extremely expensive, or maybe not enough available. On some other, it will be the lab that will be extremely expensive. And some other, in the case of the Senegal, we were having the case of someone said, for my health, I had to spend $70 on a taxi bill because it was an emergency, and the close by hospital was a 1.5 hour drive away. And those $70 was associated as a health spending because the transportation was needed in emergency at this moment. And so if you don't know those data, it's not natural thinking to understand those elements and to properly calibrate your health product. Having said that, so in that case, we did a journaling because those populations were heavily reliant on the cash-based day-to-day approach. So it's true that we feel in that case, the first step will be needed. So to have the digitization as much as possible of the payment and the financial behavior before we can get something substantial out of it.
And we're seeing a lot of uptake in the countries like India or Brazil of this type of personal financial management tools that could offer you the same insights without having the customer to do it manually, which is cumbersome for the customer and a lot more costly for you. So we don't have a lot more time, but we started late, so I'm going to run 5 minutes late at least.
No, can't.
You can't? Well, we still have a little bit. So I just want to go back to... No, we're not. We still have, you said 5 minutes. I just want to go back to Ian and hear what lessons from Australia's consumer data right experience do you think are most relevant for those countries that are trying to expand data sharing from finance to open data?
Fast. Thank you. I forgot to mention in the opening, and I'll mention it now, that joining with consumer data right, which is the mechanism for data sharing with digital identities, is probably the most important thing that we're doing at the moment, and bringing those together. The third thing after that will be payments. So data sharing, identity, and payments. One of the other really important points is think economy-wide from the beginning, but of course start small. Dream big, design big, start small. And also, I guess the last lesson, just because of the matter of time, it's really important to drive this through a department, not a regulator. I'm now a regulator. I was previously with the department. The regulator often is seen as the handbrake, but of course regulation is a powerful enabler once the work gets started, once the work gets done. So I'll leave it at that, but thank you.
Thank you. And I think I gave very brief answer I'd appreciate from Chung-hee. Just similar question, what advice would you give countries on from the experience of my data on how to do this and how to safely expand to other sectors?
Yeah, thank you for the question. I think the key principle is that privacy today is no longer only about protection. It is also about giving individuals to the ability to actively control and use their own data. So through the right to data portability, individuals no longer remain passive users who simply click agree. Instead, they can make meaningful choices about how their data is used to improve their own lives. So when data sharing systems are designed around individuals' rights, they can create benefits and opportunities both for users and for industry. So for individuals, combining data from different companies and organizations can enable more personalized services, such as health management and customized telecommunication recommendations. Additionally, in Korea this year, we are supporting projects that combine financial sector data with the data from other sectors to develop new services. The more broadly data sharing system can reduce data concentration and encourage competition. And cross-sectional data combination can create opportunities for development of new industries through the development of new innovative services. At the same time, the governments need to communicate closely with the industry and design appropriate incentives for participation. Companies should not be viewed simply as regulated entities, but as important partner in the ecosystem. So it is important to ensure sufficient consultation and balanced decision-making throughout the process. Questions about portability may arise in the beginning. However, if data sharing continues to promote competition and leads to innovative services, I believe companies will increasingly see the system not only as a regulatory obligation, but also as a business opportunity. Today, in the context of AI innovation, the importance of data is growing rapidly, and demand for combining and using data is also increasing. At the same time, promoting data sharing remains a difficult challenge. To respond to this challenge, the PIPC of Korea is exploring a variety of approaches, and I believe the examples I mentioned today can serve as practical ways to address these issues. Korea will continue working to promote both safe data sharing and the effective use of data across sectors. And I hope we want to have more opportunities to share our experience in the future. Thank you.
Thank you so much. And thank you to all the panelists for joining us today. I'm going to